One of the principles of success at anything is being prepared to act before something happens instead of reacting after the fact.
Welcome to the big show. This is Investing with Confidence. I am your host, Joshua David, and we are happy to have you with us today. Today, we got a little special guest here today. Not because he's here with me every single week. It's because it is the one and the only Mr. Al Connickson. Al, how are you doing today?
Wonderful. And there are a lot of people that would say, thank goodness there is only one.
There is one and only. How are you doing today?
I'm really doing well. How about you?
I'm doing really good. It's always great to be back helping our investing family make better investing decisions. And that's what we're going to talk about here today on Investing with Confidence, sponsored by Online Trading Academy, is different investing ideas that is available to the public. There's a lot of talk about the banks, the institutions, we call it the smart money, the brokers, on how they are investing with the stock market.
Right.
And they're placing their clients in different things that they're investing in. I mean, we had all-time highs this week in the S&Ps, the Dow, the NASDAQ was getting pretty close, but I believe there's a lot of accounts that are still underperforming. And it's unfortunate. We had the dollar that got pounded this week. Oil had a rough week. Gold was actually pretty good. And Apple, that great old Apple, had a great week. So there are some great moves in the markets going up. There's also great moves in the markets going down. What is happening? What's causing a lot of this divergence in these different markets, and how can we use these different inverse correlations to help our investing decisions?
Yeah, well, a lot of things you just asked for there, Josh.
Which one are you going to pick first?
I'll try to cover as many as I can. Well, one of the things that's going on is we've seen a rotation from what really has driven this market since the coming out of the recession back in 2009. It was pretty much the stock or the tech stocks, the big ones, the FANG stocks.
Yeah.
And there's been a bit of a rotation out of them. You mentioned Apple. Apple, has come down quite a bit from its high and is now coming back a little bit, so it's showing more strength. But what really has been happening is people have been rotating into more of the economy opening kinds of stocks.
Oh.
We've gone from more value to or more growth to more value, but we're going to see that rotation back and forth. There's kind of a push and pull there, a little bit of a tug of war. But what is really kind of driving the market is looking forward at the economy, with some enthusiasm because of all the things that are out there. The economy's got kind of a tailwind there that's pushing it, and there's some good things out there that I think are going to give us some great opportunities this year. And of course, there's always things out there that are of concern that you have to watch for. So there really is never just a one-directional strategy that you can follow at all times. But, one of the principles of success at anything is being prepared to act before something happens instead of reacting after the fact. And in trading and investing, what that something is that you want to be prepared to act on before it happens. Well, it's price. It's price moving in the direction you want it to go. If you buy something, you want the price then to go up of whatever you bought. If you sell something, then you would hope that the price goes down, basically of anything. But you have to know before it happens so you can act before it happens. So the key then is to know what causes on a consistent basis price to move. That really is the most important thing. So if there's one thing that always causes price movement, wouldn't you want to use that when you're making your investment decisions? That would result in making the proper entry and exit decisions that are going to result in giving you the best opportunity to have a low-risk entry with a high-reward trade or investment. So what is that one thing? Well, really, it's the relationship between supply and demand. In other words, the relationship between buyers and sellers. And in the financial markets, what we look for is that activity by what we call the smart money, the big firms, the big investment firms like Goldman Sachs, J.P. Morgan, the hedge funds, individuals like Warren Buffett. That's the smart money. And those guys are acting with such a high or a large amount of money that when they buy something, price has to go up because they're increasing the demand. And when they sell, price has to go down because, again, they're increasing the supply.
And that's really how anything works in life as well.
Exactly. So the key then is to really concentrate on that and use that to your benefit. The Online Trading Academy, they have an investment strategy called Core Strategy that teaches their students how to identify trading opportunities at the price levels where that smart money is potentially buying or selling. And that's important because that's because of the huge amount of money and the large volume with which they trade, whether they're buying or selling. That's what's going to cause price to move. But you have to know how where that's going to happen before it happens. In other words, you're looking for unfilled orders that are going to become filled orders. That obviously is a timing strategy, and that can be used for individual assets or the markets in general. But the results of timing, really, when you learn how to do that, what it does is it allows you to find a price where that particular price provides that lowest risk, highest odds of working in your favor trade or investment. And again, it's just finding unfilled orders that the institutions are going to fill when the price reaches a certain level.
Yeah, and that's basically at or near a turn in price.
Absolutely. Almost always that is where the quality trades are found.
Yeah, and that's why you have to identify where that is at. And Al's talking about getting into positions or out of positions. We'll start with in positions before it actually moves. I mean, how many people listening right now have said, man, I wish I would have bought that stock. Sure. I could have made a ton of money. I should have done it. Well, that's what happens when you don't have a proper investing strategy. You have to place the odds in your favor and place orders based on what's happening in the markets. Whether there's more supply in the markets, price will go down. Whether there's more demand in the markets, price will go up. And Al's talking about, the Online Trading Academy. They have, they have an academy right here in Bloomington, and they teach strategies to teach you to make better investing decisions. So it's all about having that core strategy. Whether you're trading stocks, whether you're trading options, you can be trading futures, but you can also be trading Forex. So it's all markets with one strategy. So it doesn't matter what you trade. So Al, it's kind of the beginning of the show here. It actually is the beginning of the show. And we have a lot of listeners that want to understand more about the core strategy, more about how to place odds in your favor, more about how to get in positions before they actually move. We talked about Apple this week. They had a very good week this week. Now is not a good time to get in it because it's already moved. So entering in positions and identifying that where the smart money is moving these markets before it happens, I should say potentially. Al, the markets are thriving. I feel like it's 95 right now. And we have a lot of listeners that want to understand how the smart money creates income with these great markets. So coming up next, income. We'll be right back.